The central bank is expected to kick off its two-day policy meeting tomorrow. Many experts are predicting that it will cut those interest rates, and that could have a major impact on your wallet. Joining us now, NBC News senior business correspondent Christine Romans. Christine, we mentioned this would be the first rate cut for the year since 2024. Why now, and what would it mean for mortgages, for car loans, for credit cards?
Well, the Fed had been on pause because it was concerned about inflation still being too high. And when you cut interest rates, sometimes inflation can go up after that. So it was kind of on pause, but now concerned about a weakening job market. So now they want to cut interest rates to help the job market. What it means for all of those borrowing costs, it means borrowing costs will go down a little bit. We've already seen it in mortgage rates. In anticipation of this, mortgage rates have been declining, but credit card interest rates are at record highs, Kate. I mean, they're above 20%. That is real dangerous debt there. Auto loans also much higher than normal, and federal student loans are also set by this interest rate that the Fed moves.
You just described this balancing act that the Fed is trying to do. So talk about inflation, because we did just see last week that it ticked up slightly again. What happens if they lower interest rates? Do we see inflation?
And that's why we think if they make a move, it might be just a small move, because they don't want to risk pushing inflation up. And also, they're waiting to see what the effect will be of tariffs. So far, the president's tariff regime has not necessarily driven up prices. You've seen companies eat a lot of that cost, or negotiate with their suppliers to eat some of those tariffs. So tariffs haven't been found too much yet in consumer products, but anybody who's gone to the mall or gone to the grocery store, you're seeing
nobody goes to the mall anymore.
Right, I know. You know what I mean. But anybody who's looked at any of these prices have seen prices are still rising.
I shouldn't say that. Some people go to the mall. I want to ask about long-term employment numbers, unemployment numbers. We got some new ones on Friday, and that was a post-pandemic high for people long-term unemployed.
This got a lot of attention, this downward revision in jobs. There are only 22,000 jobs added in August. You've heard all these jobs numbers, but inside the number is a long-term unemployment number. What does that mean? The share of workers who are out of work 6 months or longer. And that number is the highest it's been since the pandemic. And about a quarter of people who are out of work and say they would want a job, a quarter of the unemployed have been unemployed for 6 months or longer. And that's a high number. That's something to watch.
Yeah, you were telling me a lot of college graduates are in that number too. Christine Romans, thank you. Time for more consumer news. Ford is moving its headquarters.